To consistently be able to make money from trading, you need a trading strategy that is proven profitable, meaning that it actually makes money and has been proven to make money over a long period of data. Secondly, it needs to be repeatable, meaning a set of rules that if you just tick them, it's if this happens, then I do this. And finally, it needs to be simple to use. The worst thing that you can have is a complicated strategy because that complicates the process. And the more bits and pieces, the more moving parts of a trading strategy, the more difficult it is to execute in the market. And so in today's video, what I want to reveal to you is one of the edges that I have developed over the past few years, that I have years of verified data with this edge. And I'll show you that in a bit more detail in just a second. I'm going to share that exact strategy. I'm going to cover these exact trades that you're seeing play out right now. And I'm going to do all of that step by step. I'm going to reveal the step-by-step strategy. So stick around, pause the video, go grab a notepad and pen, take notes because this is going to be a banger. So these are the two trades that I'm actually going to be breaking down in this video. And you'll notice they follow the exact same strategy and they happen just a day after each other. Now, what you're seeing here on screen is the data of this strategy. You can see that I have executed 577 trades with this one specific strategy. It has returned over 360%. And this is the data that we have for it. You can see here 2021, 2022, 2023, 2024, and 2025. This obviously isn't filled out. You can see that that is 4 years to 5 years of data. And you can see here, green month, 23% month, 23% month, 32% month, 15% month, 19%, 31% month, 13%, 17%, 15%, 12%, 19%, 18%, 20%, 15%, right? You can see all of these green months. This is the actual verified data of the strategy that I'm about to break down to you right now. Oh, and of course, it wasn't just me that took this trade. This is Maria, who has been with us for a very short period of time. And this is exactly what she said after taking this exact trade. She says, after years of trying different courses and giving up, this one finally made things click. I closed my first and last month for this year, meaning she has only been trading 1 month on her live account and she is up 15%. And she has taken again this exact trade. And this is me sharing the trade just as it is actually playing out. So before we actually hit the take profit, which is all the way up here, by the way. And you can see here that a bunch of our inner circle students took this exact trade. So without further ado, I want to break down this strategy literally step by step. Let's dive in. Okay, so the first part of any strategy, for me at least, is directional bias. You essentially have to understand when you're coming into the market each day, what direction should I trading? If you can solve that, you literally have 50% of your problem solved. If you know what direction that you're looking for the price to go into, then you've, again, already solved half of your problem. Now you just have to figure out where to get in and how to get in. So we first start with what direction. And the easiest way to understand the direction that you're going to be trading today is simple market structure. First and foremost, we're going to run through the simple version, and then I'm going to run through the advanced version. So market structure is all about understanding where we are likely to go to next. It's that simple. And the way that I do that is by finding the directional bias. So what you can do is on any piece of price action, any time frame, I specifically use the 15-minute time frame to do this. It doesn't change. And I'm trying to identify the swing points of price. So you can see here we have a low. Price comes all the way up here. Then we have a high and we reverse from that point, right? All of these external parts that you can see, these are called swing points. A swing point simply means the edge of price before a reversal. So you're looking at a low down here, puts in a high. This high is a swing point because it sits on the outside of the price range, right? All of this price in here is inside. This sits on the outside. And then in here, we put in the low of price down here, right? Another swing that we get a reversal from. All of this is internal price. And then we put in another swing. And then this is internal, and then another swing, and then internal, and then another swing, right? So what you'll notice about these swing points is they are getting gradually higher and higher, which simply means that we are bullish, right? We are expecting price to trade higher. So the key here is when we get a high and then price comes in and puts in a higher low, meaning that this low here is higher than the previous one. And then we go ahead and break structure like this. So we break above this high and then we go and put in a higher high. That is verification that we are indeed bullish. So what you're waiting for, right, is you're waiting for a pullback. If you are bullish, You are waiting for a pullback, and your job is to try and catch the low of the pullback. And then you want to be a buyer all the way up to the high of the price leg. That is your goal as a trader. Forget all this fancy nonsense. The idea is simple. You want to find a trend, right? Everybody says the trend is your friend. It can be difficult to actually find the trend. So that's what we're going to be doing. And all your job to do is to find that trend and find a reasonable point in that trend that you can get in, and you just want to take the next leg of the trend. Trading doesn't have to be hard, right? It's just simple. The hardest part about trading is actually your mindset and your operating system, which, by the way, when you're finished with this video, I've put together a 45-minute free training that's going to dive deeper into what it actually takes to become a profitable trader. I'm not just talking trading strategy. Trading strategy is 1/3 of a profitable trader's equation. There are another 2 key points, and I created an entire 45-minute free video just like this one, where I dive even deeper into profitable trading. I'll link that in the description below. After this video, go and check that out. So we have this high here, price pulls back, then we create a higher low, and then we go on again to create a higher high, right? So at this point, we are bullish. Very simple. Then what happens, and this always usually happens when a trend becomes exhausted because price can't just continue going up forever, at some point in time, we are going to get a retracement. A sure tell sign that we're about to have some type of retracement is when price starts becoming a little bit more indecisive. So you see here, we have these clean runs of price, but then all of a sudden we start getting kind of choppy in here like this. We're not really going anywhere. That is usually a sign that the price is about to reverse, right? We've reached kind of the highest accepted point in this price leg. And the way that you can objectively identify a change in trend is, let's say you have a break of structure like this, and then you have a change of character. So you go from higher high to actually lower low, meaning that this low now is lower than this low in here that was previously in control. That's a change of character. And again, it's very simple. The only thing that changes is now you're a seller, not a buyer. When price was putting in these structural highs, we was a buyer. And then when it shifts bearish, well, now we're just a seller. And so now let's say you're here in price point. A big mistake that a lot of traders make is they try to sell an exhausted trend. Very, very dangerous mistake. A lot of traders, when price is breaking out of this low, the breakout traders or the trend continuation traders, whatever you want to call them, they start selling when the trend has been broken. That's not a good way to try to trade a trend. In fact, that's what they want you to do, because that's how they engineer liquidity. Because the truth is if you're a breakout trader, well, now you logically speaking have to put your stop loss at the high up in here, because you can't put your stop loss in a random high up here, even though some people do. And then what happens to those guys is when price retraces, right, they take a stop loss and then price goes in their direction. So I think a breakout trader is a very terrible way to try to trade a trend, because the reality is, even if you take a 1-to-1 risk to reward, which means that when you factor in fees and slippage, if you're trading prop firms especially, you're going to have to win 60-70% of the time as a breakout trader just to barely get by. Because when you factor in fees, commissions, and spreads and everything, and slippage, you're going to have to win 6-7 trades out of 10 to just barely make a little bit of money. And the truth is that's not going to happen to you. You're not going to catch a breakout here and then price going to go another 100% down to the low. It's just not going to happen. So the best way to trade a trend is waiting for a reversal and continuation. Because what happens after you get a break of structure, now it might be right here, it might be down here. But at some point in time, after you get this break of structure, price will eventually come for a pullback. And that pullback will be something like this, right? And then what you want to do is you want to wait for the right confirmation, which is going to be one of our later rules. But you wait for the right confirmation. And when you get that confirmation, now you want to sell. And the difference is just huge, because now you go from being a breakout trader, right, who's trying to sell all the way down here. And let's say that's from this high to this low here, that's a 20 pip move. So you would need another 20 pip move just for a 1-to-1 risk to reward, right? Which is crazy. For another 20 pip move, right? So let's say the breakout trader's targeting down here. If I was to target here, right, I'm going to do a 1-to-8 risk to reward. 1-to-8, meaning if I risk $1,000, I'm going to make $8,000. The breakout trader who's selling down here, who puts their stop loss above here because it's the only place you can actually put your stop loss, they're going to risk $1,000 to make $1,000. but then they got slippage and then they got commissions. So they didn't even make $1,000. That's the importance of when, right? Because one thing is the direction, amazing, but when you get into the trend is arguably more important than the direction of the trend itself. There are some times where I make money even when I'm wrong on the trend, which is a topic for another video. So again, that's simple market structure. And all you want to do is you want to be a seller at the right time, which is what I'm going to show you later on. You want to be a seller here. And all you need to then do is you don't have to gamble on the direction of price. You don't have to gamble on how far below that low that we're going to trade. Because in my opinion, the only relevant information for a trader is your current swing high and your current swing low, right? If you want to trade simply, if you want trading to be actually easy, then the less things you have to focus on, the easier it's going to be. Just imagine for a second, your only focus is the current swing range you're in, right? I don't have to control anything else. I know with a statistical probability that if we are trending bearish, there is a higher chance that we continue bearish on the next leg and that we go below the current low. I don't know if the price is going to trade down here. I don't know if it's going to trade down here. I don't know if it's going to trade down here. I don't know if it's going to trade down here. But I do know that there's a very high chance that it's going to trade to this low right here, right? Very high chance. So that's all I need to do. I need to find out when the highest point is. I need to find out when this high comes in place, right? If I'm a buyer, it's when does this low play? When does this low play? And I need to somehow find out with the right confirmation where this swing point is going to be. And then I need to capitalize on that. And you know what the best thing is as well about high risk to reward? I'm getting a bit ahead of myself now, but we'll get into that detail later. High risk to reward, right? Well, let's say, for example, I'm a seller here, and this is the first trade that I take, right? And this is going to be a 1 to 6. Well, let's just say I get a stop loss. Okay, sure. I get a stop loss. And then I get, let's say, another opportunity, right? To go again for another 1 to 6. Well, what's the big deal? And you know what? Let's say I get another stop loss, right? Okay, fine. 2 stop losses, another 1 to 6. And let's say now price is ready to put in that high. Now you found the high. It wasn't this high. It wasn't this high. It wasn't this high. It was this high. Still 1 to 6. You took 3 trades. You lost 1 trade, minus $1,000. You lost another trade, minus another $1,000. You're down $2,000. And then finally you catch the trade and you make $6,000. Who actually cares about the 2 losing trades? What I care about at the end of my trading day is how much money am I walking away with? And in this instance, I'm walking away with $4,000 on a 100K account. 200K account, $8,000. 400K account, $16,000, right? And you guys, if you're not new to the channel, you've seen the types of trades that we take. So that's simple market structure. Let's move on to a little bit more of an advanced idea of market structure, which by the way is honestly still kind of simple, which I'll get to in a moment. After I've touched on this type, I'm going to go into the actual price and we're going to look at market structure. So this may look confusing, and honestly, this is what price usually looks like, but this is no more complicated than the last one once you understand how to actually identify your swing points. And so what you want to do, as always, is identify the external swing points after we break a structure point. So if this is my swing low, that's my structure point. Price puts in a high, that's my trading range, period. Like nothing else exists outside of this low and this high. Right? Of course, sometimes I might have a daily bias or I might have a higher time frame point of interest. But truth be told, like the simplicity of this, all you actually need is, okay, this is my low, this is my high. Nothing else exists. And let's just say we are bullish, right? So we've had a break of structure here. So we know that we're bullish. And now we have this high and we have this low. The only thing that means anything to me is this high and this low. And my only job of the day is to catch this low. That's my only job. So step 1 is just you identify the direction of price. Step 2 is you wait for a confirmation to get into the market. And there's a couple little small details that I want to add for you that's going to increase the probability that you will take the right trade, which we're going to get to. So all you need to do is wait for the confirmation of this level. That's it. So price puts in these lows. And I see this weird misconception with traders for some reason is they get caught on the wrong side of the market. So when we should be a buyer, right? If I'm here now and let's say price is here, I'm patiently waiting for price to hit my point of interest, right? Price to take the right liquidity, price to hit my right point of interest and wait for my right reversal. So I'm not involved here. But for some reason, I either see traders getting in too early to a trend. They got things right. Price is bullish. They are a buyer, but they're just there too early and they just get wiped out for no reason. As long as you apply the next couple of rules that I'm going to show you after, you'll stop taking those trades. At least you're on the right side. The other thing is that traders are just on the complete wrong side because they don't know how to read market structure. I see it all the time. Like I see traders looking at this type of structure. They're like, okay, we got a high. Okay, we got a low. Okay, lower high. Okay, lower low. Okay, we're bearish. Okay, cool. I'm going to sell here. Price comes up. Oh, okay, I don't get tagged in. Okay, it comes low. Okay, now I'm going to sell here. Right? And then price just smacks them out. Like they're trying to sell in here. And by the time they're trying to buy, it's just too late. The move has already happened. So many times I see traders go through this. They try to sell when they should be looking at buys. And then when they get stopped out of their buys, they're like, oh shit, maybe I should be buying. And at that point, it's too late. Price has already hit the level. And then the next thing happens again. Because what happens now is now we have a break of structure. Now this is the swing high here, and this is the swing low. So again, all that matters in this point in time is this low, right? And this high. That's it. That's all that matters. And again, you will see traders looking at that like, okay, low, high, higher high, higher low, higher high. Okay, I'm going to try and buy here. And it's like, bro, you're just too early. Like you're too early. And then price stops them out and they're like, oh shit, okay, I'm going to sell. And then price doesn't tag them and we go new lows and they try to sell again in here. And then price stops them out. And it's like, you should have been getting in longs here. And now price has stopped you out. Now you're trying to buy and it's too late. Price is gone. Like just that one issue of being too early and then wrong direction. That's literally the difference between blowing prop firm accounts month after month, week after week, losing day after losing day, to the flip side of being consistently profitable, making, 10, 15% a week, scaling prop firms and taking multiple payouts, which by the way, at this point, we have hundreds of traders inside the inner circle that are taking thousands, if not tens of thousands of dollars a month, just trading one simple strategy. So again, we break structure. We have a high in here. We have a low down here. Price breaks the highs. So we're still bullish. And then price shifts bearish. Higher low, higher high, lower low. So at that point, what happens? We're no longer bullish, right? Now we're bearish. And what are we waiting for? We're waiting for a pullback in here, the right reversal, and then we just target in these lows. And so if you're looking at this now, right, you're bearish. All you need to care about, none of this is important. I see all the time all these traders like, okay, we've got old points of interest in this price leg that happened like 7 days ago. And it's like, bro, it doesn't mean anything. You just need to understand the current trend. Stop overcomplicating it. It's simple. Current trend, swing high, swing low. You wait for price to have a reversal. You don't try and sell it too early. You wait for price to come back. As it comes back, it looks bullish until it isn't. And then you trade short and you get out and you do the same thing again. And you wait and again. And you know what? At some point in time, it won't work, right? What will happen is you'll go up here, you'll take a sell and you'll get a stop loss and price will rip up here. But then what happens? Look at that. Now we're bullish, right? We had a change of character. Now we're bullish. Now what do you think we're doing, right? Who cares? Okay, we got on the wrong side. Now what are we doing? Now we're buying, right? Don't let all of this confuse you. It's very simple. This is where people get lost inside the leg. You're buying, you're selling, right? You're buying. Oh no, wait, I'm selling. Oh no, wait, I'm buying. Oh no, wait, I'm selling, I'm buying, I'm selling, I'm buying. Just look at the external rotations of price. That's all you need to focus on. It's literally that simple. So here we are on the actual trades that I executed, right? And let me get rid of all the annotations. And this is all you see. And in fact, let me come back before I even get into any of my trades, right? Because this would throw a lot of people off. But let's just zoom out here for a second. And first and foremost, you can look at this and you can obviously see we're in an uptrend. But this is, again, another thing that gets confusing for people because there's a million and one ways that you could try and read structure, right? You could try and look at this and you'd be like, okay, well, that's a high, that's a low. Okay, we take the high, okay, low down here, okay, high up here, okay, I'm going to wait for price to come down here and then I'm going to try and buy it, right? That's something that people will do. And trust me, like I spent so much time building my own step-by-step criteria on how to exactly read market structure. Like I spent a whole year testing things to get what I have today. For me, I just care about the sessions. So all of this is just noise for me, right? Where we are right now is we're here. And all I need to understand is that at some point in time, we were going through a period, right? I remember the beginning of December, where we were bearish. We were putting in these lows continuously, and then we shifted bullish. So now none of this matters to me I just know that we're bullish. So now I can just focus on current price. Okay, at this point in time, we just put in a swing high, right? It's ran through this swing high that was in control was here. It's cleared all the highs. This no longer matters, right? We're bullish from this high. And then what happens? This swing point produces a low, like I just showed you, right? We produce a new high up here. Guess what is the only thing that matters? It's this low and it's this high. And guess the only direction that I'm trading in? It's up. A lot of traders that I see get caught, like price comes down here and now they're trying to sell this level, right? And look, it works in this instance, but where do you sell off, right? Where do you get in? Do you sell here and then sell here? Like it's 1-to-1 risk to reward. Like I can't make sense of it. And then price shifts this high up here and now they're a buyer from here, right? Again, like it's possible, but it's just the wrong type of structure. You don't need to get involved in all of this mess, right? It's simple. I am a buyer. I am expecting price will hit this high, right? That's simple. Now there's a few small details on how we get into the trade, what we need to see first, how we get confirmation. That's what I'm going to tell you next. But for now, I'm a buyer. All you need to know is I'm a buyer. In this green box and this yellow box, they are my buying windows, right? I'm going to tell you this when we get into the next step. But look what happens. There's trade one done, right? I was a buyer. The trade you just seen me show that my members also caught, we were buyers at this point in price and we got out of the trade at these highs. It's 1 to 8.8 risk to reward. And now what happens? Oh, look, we've now broken structure. Where is our swing low? It's the lowest point that price came back before we broke the high. Oh, so now what's important to me is this low down here. Oh, but the fair value gaps in the leg down here. What about the fair value gaps? What about this? What about that? Bro, no one cares. Market don't care. Market cares what's happening right now. You need to focus on what's happening right now. Because what happens? Now the day's finished, right? My green and orange box for the day are done. Now I need to wait for tomorrow. So where's price at when I come into the market tomorrow? Right, we're opening now. We're about to open up for London session. Here we are. Do I care about this high anymore? Nope. My new focus point is this low and this high. My buying points. I am ready to be a buyer at this price leg already. Oh, would you look at that? We got in buys again. 1 to 5 risk to reward. Monday, Tuesday. Bro, you're done for the month. Trading isn't difficult. It's simple. Remember what I told you. Like finding a strategy that actually works, that's the easy part. Most of you haven't even figured out a strategy that works right now. That's understandable. This strategy works, and you've probably watched many of my other strategy videos as well. But if you want to know how to take a video like this and not just be unsure how the step-by-steps work and that sort of stuff, again, after this video, watch the 45-minute free training down below, and you'll know how to take a video like this and turn it into irrefutable proof of a strategy, and then work on the other two things. Again, I'm getting ahead of myself. I'll give you a little teaser. Do you notice anything familiar about both of these trades if we plot them back on? Do you notice anything familiar? Like before I take these trades, like I want you to know, do you notice anything familiar? If you do, comment down below what you think is familiar about both of these trades. You got it? Cool. Oh, subscribe, by the way. If you want to see more videos like this one, subscribe. So the thing that is familiar is there's this interesting little blue box, right? What is this blue box? Interesting. Notice how both of the trades, we just run below this blue box and then we reverse. We just run below this blue box and then we reverse. Huh. Interesting, right? I'll break that down later on because that's a very important part of this strategy. So rule number 2, the little blue box, right? Or key liquidity. Now, this is one variation of key liquidity. There are a couple of others, but the key liquidity that I am focusing on in this video is Asia, right? This little blue box. Now it's very simple, right? I don't need to spend too much time on this. I've just showed it you already. When you have your direction, which is step 1, in this instance, we are bullish. Great. All I care about is this high and this low. I want to be a buyer in my little green box or my little orange box, right? It's that simple. But in order for me to be a buyer, right, with this specific strategy, I need to be below the Asian session low. This low right here. I cannot buy here because statistically speaking, if I do in this specific model, it will cost me money. So I need to wait for this level to get taken out. And then, and only then, I can be a buyer, right? And if we go back to this example, you can see here, that is 8 p.m. to midnight Eastern Standard Time. That's my Asian session. And you can see that my criteria is I can buy on this day, but it has to be below Asia low. What happens? Asia low here, we take out the lows, we go higher, right? Here is my little orange box. I'm not going to break down this trade in this example, but this was a trade from the Friday, right? That a lot of traders still took. Notice we're below the little blue box. This is my New York session. For this session, I have to be below Asia in a bullish continuation. This is another trade following the exact same strategy here. A couple of little different variables, right? By the way, I have 7 different variations of this strategy that I'm sharing with you right now. In this video, I'm sharing one of them. This is my New York session. They're all pretty similar. But yeah, for the London ones that we're taking, notice that the little blue box has to be taken out. And then, and only then, can we buy. Because if the little blue box doesn't get taken out and you try to be a buyer here, you get taken out. If the little blue box doesn't get taken out, you try to buy straight away, you first get taken out and then price goes, right? There's a very important logic for this. Cool. Moving on. Right? Our next rule, something that can help your trading, is area of interest, right? Or point of interest. This can be known as an order block or a fair value gap. For simple purposes, just imagine an aggressive move. We're looking at the final sell before an aggressive buy candle gets put in, right? That's going to be quote unquote an order block. Now, I have different videos on order blocks. If you don't know what they are, you can watch them on the channel. But notice that, we have bullish structure and then prices coming in lower. And then we shift bullish again internally here. Notice that we leave behind this order block. These order blocks are perfect areas to use as areas of interest. Remember I told you, right, on direction. For example, you can know the direction, right? We're bullish for the day, but you can't be a buyer here. Maybe you get a stop loss. You try to buy again, stop loss. You try to buy again, stop loss. You try to buy again, stop loss. How many stop losses are you going to take in a row? And I see this a lot of traders, right? A trader might take 3 stop losses before a profitable trade comes, but because they've already taken 2 or 3 losses, they're like, I don't really want to take that trade, right? If you've been trading long enough, you'll know that feeling. So this area of interest can help you with that because you can avoid stupid areas and you can find areas like this. And then you want to look for specific key details in here, which I'm going to share with you in just a moment. So area of interest, right? When you're bullish, look for these order blocks or these fair value gaps and then wait for price to come into those levels. Especially if you're kind of somewhat of a beginner, definitely implement areas of interest because it will help your psychology because you'll win more trades and it will test your patience because you'll have to wait for price to come to these levels. So you want to wait for key areas of interest to get hit before you start looking to take trades instead of just taking trades everywhere and anywhere. Same thing happens again here, right? We take out the high. So now it becomes this low down here to this high in here. Price starts trading lower, right? A little bit of an internal shift in here. And then price leaves behind this area of interest. This is a perfect area to look at being a buyer from and just targeting these highs. So areas of interest, right? And again, if we look back to the price action that we just took, right? And in fact, if we look at the trades that were executed, now we need to find areas of interest. So if we come back to before the first trade gets hit, and in fact, kind of way before the first trade gets hit, truth be told, notice that as price comes down, right, we shift high, we pull back, we shift high. So now, instead of looking at this large range, I'm looking at this high and this low. Notice that there's a big move here. And the same thing that I just showed you, the area of interest, right? This kind of final area where the momentum comes in. That's an area of interest. And obviously we hit that level first before we trade out. But then we still have Asia low. So this area of interest is not finished yet because we can't long from here without the Asia low getting taken. So when that gets taken in the London window, you see we're still inside of this area of interest. What happens is price trades out from that level. And if you go into the micro details, which is how I actually got my entry on this trade, which I'll show you later, is this concept of fractals, which is the same thing that happens on a broader scale, also happens on a smaller scale. It's called a fractal, right? So wonder of the universe. So this same thing here, where we have this low and this high and this area of interest, we also actually have, right, before it even happens, we have the internal shift. Notice that price went lower low to higher high, right? This high and this low, and we have the same thing just on a more refined and smaller level in here at this low, right? Same thing, smaller scale. That is the power of quote unquote area of interest. Now we fast forward into the next day and the next trade itself. It's just about to open. What you'll notice is the same thing. Now we have low down here, high up here. Price is already coming from an area of interest, which is this fair value gap. And then off this area of interest, it makes another one itself, which is this sell in here to buy. On a 30-minute time frame, it's a lot cleaner, right? Sell to buy. And then notice price tags it quite literally to perfection. And then again, what did I tell you? On a smaller scale, if you look closely, we have low to high, and then we have this same concept, area of interest. So it happens on a larger scale, it happens on a small scale, and if you go into a lower time frame, happens on an even deeper scale. So that's directional bias, key liquidity, and area of interest. Now, the final piece of this puzzle is how do you actually know when it's time to trade? Because again, we've gone through this now, right? It's one thing to know the direction. You know the direction, but you don't know that you should be buying here. Like, how many losses are you going to take? Okay, finally, we have area of interest. Okay, so now we know the direction and we know when to take the trade, right? Or where from. So we have the direction. We know now where we should be taking it from, but now we need to know exactly when, right? Because we take it from here or here or here or here. So this is about when. This is the smaller level details. And this is actually a very simple one as well. Step one, structure. Okay, swing low, swing high, swing low, swing high, right? We're bullish. Okay, awesome. Step two is we're gonna look for an area of interest. Let's say we've got, an order block in here. Okay, amazing. Step three, make sure it's below Asia low. Let's say Asia low is down here. Everything looks great. Now what you need to see is, and by the way, the blue is the 15-minute time frame. The dotted is the 1-minute time frame. Here's what happens. When you get a break of structure and price comes back down and it breaks Asia low and it's into your area of interest, right? You will see that as price comes down, the 1-minute time frame is bearish. The same principles that we just looked at to find our 15-minute bias, on the 1-minute time frame, we're bearish. It's that simple. Until you hit your level and then you shift from bearish to bullish. When you shift from high, lower low, right? We're bearish. You can see these swing points are getting lower and lower until the swing point gets higher, higher high, change of character. When this happens, now is time to trade. And you're going to trade from the same area of interest, right? The order block that creates the reversal. And you're going to put your stop loss just under the 1-minute low. And you're going to put your take profit on the swing high. And that's how you actually trade this model. That's your entry model. So let's take all of that and let's just go and play the trades out step by step. So here we are again, same price action. Let's go back before we take any trades at all. Back to Monday, 15th of December, where myself and many of my inner circle students are just looking and waiting for long positions. Step one is directional bias, right? We've already been through this. We know that we are bullish. We know that our swing high is up here. And we know that our swing low is down in here. That's step one. Great. Step two is going to be our area of interest or our Asia low, right? Whichever one. We have an area of interest, which is right here. We pull that across. Awesome. Step number three, make sure Asia low is taken out. Asia low is indeed taken out. Awesome. Step number four, make sure that we're in our time zone. So here you can see we are in our London session. You can see here we're kind of just messing around. There's no real directional bias. Then what we're waiting for is we're waiting for this, right? You can see as price comes down in the 1-minute time frame, high, lower, low, right? Below all the lows, lower high, lower low. So you can see that we were bearish very clearly. And you can see we shift bullish very clearly. And so now what we can do is we've confirmed that we're going to be trading higher from this level. And so we can just use this area on the 5-minute time frame, right? This order block right here. That's our entry. That's our confirmation. We have just confirmed that for the day, we're probably going to be bullish. Because again, we're a buyer. So what we want to see is we've done all the hard work before. So it's like being a sniper. We are a sniper. All of the hard work of being a sniper, amazing world-class sniper that has a fucking 100% hit rate, is in preparation, right? It's not in taking the shot. It's in the preparation. It's everything that we've done before the trade that makes this beautiful. The sniper doesn't just show up and start spraying shots and hope something hits. No, he's an accurate, deadly assassin. First and foremost, he's aware of his surroundings, right? He's weighed up the entire situation of where he's going to take out his person. He knows where his target is. Now he needs to find where he needs to position himself around to get the cleanest hit on his target. That's what we're doing. We know we're a buyer. We know our area that we want to be looking at taking the trade from. And now we have that person in the line of our scope. We're just waiting for the green light. That moment where the person reveals themselves vulnerable to give us a clean shot. That is the confirmation on the lower time frame. Now the market has done revealed itself. It's shown us its hand. Now we need to take our shot. And you know what they say? You miss every shot that you don't take. And so make sure when you get your opportunity, you fucking pull the trigger. Because so many traders hesitate. Fucking pull that trigger. You've just done all the hard work building the trade idea. That's where the hard work is. Now it's just discipline. That's how, satisfying it should be. You get tagged into your trade and price just runs. And you don't even have to worry about it because you did all of your hard work in preparation. And so your trade. And again, so many traders in this scenario, by the way, start cacking themselves. This is why you need to watch the video after this one because strategy is not enough. Do you know how many traders in this scenario, price is running up here and then it reverses down here and then they cack themselves, start getting scared and they close their trade down here because they think that it's going to run all the way back down here. And so they don't get the full reward of 8 times their risk. They close their trade early and they get 4 times. And you might be sitting there thinking, 4 times my risk, that's awesome. But this is a strategy that's built with a math model that has to have its rules followed. That's what makes it profitable. And so you play out your strategy, right? You just trust your edge. That's it. You've done the work. Trust your edge. That's what you have to do. And guess what happens? The exact same thing happens again. And it's the exact same scenario, right? Next day, same thing. Target acquired. I know where I'm shooting from. I know where my target is. I know who I need to take out, right? I know where the best place to position myself to take my shot is. I know my position. I'm now approaching that position, right? 15-minute time frame comes in. I'm in my position. Now I'm just waiting. I'm waiting for my victim to just show me itself. And the moment that this 1 minute structure changes, right, what's happening right now? What do you see? You see we're bearish, right? You see that we have a swing high and a swing low, right? We have a shift of the lows here. We're bearish. We're waiting for this high to get taken out. That's our confirmation. When that high gets taken out, now it's time to take your shot. And where are you taking your shot? You just want to make sure you get a minimum of 5 risk to reward. So place your entry in an area in this scenario where your target is 5R. For example, you can't trade up here, right? Because that would only give you 1 to 3. So you pull your entry down. Again, I have the data on this. This is what I do. I'll pull my entry down until it's 1 to 5. And then when it's 1 to 5, meaning that I'm going to get 5 times my risk. When it's 1 to 5, that's when I know that I'm in the right area. And what do? I just wait. And I let the market do its thing. Because at the end of the day, I've already done my hard work in planning. And so that's the strategy that I want to share with you. And again, go ahead and watch the video that I've linked down below because that video will give you more breakthroughs than this one did.